Sweet.
Yep,
Perfect.
you got it.
All right, I guess we'll start right now. How's everyone doing? All right. My name is Brian. I'm OBR Investing's creative director. You typically don't find me up at the front of things, but I usually work in the back end of social media platforms as well as company branding. This is our Trading Simplified webinar with OBR Investing. Before we begin, I'll give you a little background as to what we do. Consider it a digital trading floor right at your disposal. We host retail traders from around the world, all sorts of experiences, expertise, and we provide a platform for them to primarily share investment ideas, engage in live conversations, as well as consume education and take trades from analysts who are here with us today. Speaking of which, I'd like to introduce our head analyst, Austin Cancilla, as well as Cody Mashburn, CLAYTON, ASTORE, and Logan Silver. These guys have been in the business of trading for several years now, and very shortly you're going to get a good look at their individual strategies. In exactly 2 weeks, it's going to be our 1-year anniversary from our official debut. So if you haven't already, be sure to follow us on socials. You'll get some good updates, and I think I'll throw that into chat right now. I think Ben will do that. And in light of that, we'll also provide you guys with a code for 25% off of our services. This isn't to imply that any immediate purchases is necessary. We also do offer a 7-day free trial, but the code should be up on the screen right now, and it's all caps OBR summer, and it's only for first-time purchases only. For today's webinar, Trading Simplified, our panelists will begin by outlining the key differences between trading versus investing. And then afterward, they'll be going into a handful of topics, primarily revolving around options trading, as well as providing insight on their own personal strategies and opinions. Without further ado, I'll give it to our head analyst, Austin.
Thank you, Brian. What a wonderful introduction you gave us there. So I'm just going to do a quick introduction. I know Brian said my name is Austin. My name is Austin Cancilla. I am the head analyst here at OBR Investing, and I'm kind of overseeing the whole analyst roles over at OBR. I'm also a founder of OBR. I've been with them since the beginning. Lucky enough, we built a team with all these wonderful people, and we get to have a conversation today about some really exciting things. So I'm hyped. Let's get it going. Bring me to the first slide, baby. Let's go. Yeah. Okay. Now let's clear the air real quick, right? What's the difference between trading and investing? Because I think not a lot of people kind of understand the difference between the two, even though they may seem very obvious. So the main thing that comes out to mind with me, the difference between trading and investing, is the timeline, right? When you're trading, you're looking very short term, maybe you're even looking long term, but the idea is that you see an end to the road, right? You see where you're going to be exiting a trade or exiting a position for potential profit, right? Whereas investing, you don't really have that kind of attitude, right? The end of the road might not always be very clear. Your time horizons can be much broader, and the way that you're investing and the convictions that you have in your investments can be a lot different than trading, right? When you're trading it, right, you don't have to marry the stock or the equity or asset that you're trading. But if you see a good setup, you can absolutely take advantage of that. Investing is a little bit different. You kind of want to know what's going on with the company that you're buying or the asset that you're buying. You want to know what's their outlook. What have they done previously, right? You're looking at it in a much more broader scheme. So it's very important, in my opinion, to know the difference between the two. And we have a wonderful visual here kind of showing the difference, right? We can see zoomed in on the trading side. We're looking for all these different moves within this broader uptrend that we could take advantage of to trade. Whereas in investing, right, we're looking for a much broader move in the market. So I hope that makes sense to people. But the real difference between the two is timeline, and that should be acknowledged. So CLAYTON, Logan, if you guys have anything to say about that, I would definitely like to hear your opinions.
Go ahead, Logan.
Yeah, absolutely, Austin. It all really does come down to timeline, and it's going to be different. And we did want to specify that today's call is really going to be focused around trading. So rather than investing, right? But we do have our investment specialist here, CLAYTON, who I'm sure is going to share some insights as well. But again, the main difference between trading and investing is, besides risk management, the time frame. And risk management is another key that comes in. This is something we're going to cover later in the call, but that's pretty much all I have to say on it. Cody, do you have any notes?
Yeah, I really liked how you touch base on the exit plan, kind of risk management. I think that, in my opinion, is the main difference. When I'm looking to invest in something, it is typically longer term, and I honestly don't really have a super strict exit plan when I am investing compared to my trading, where I definitely have my strategic plan set up before I even enter that position. So always having a plan to exit when you're trading, whereas investing, sometimes you don't necessarily have one.
Well, I'll finish off that by saying, guys, I hope you all are doing well. I'm more on the privatized portfolio management side of things. So I do look at the investing side of the aisle more heavily than I do the short-term day trading and scalping. So first of all, I appreciate you guys being here. Now, the major difference for me on the portfolio management side of the aisle rather than on the short-term side of the aisle is that I'm looking at the macro rather than the micro. So essentially, on a technical side of things, I'm looking at much higher time frames. So I'm looking at a year's worth of data or 5 years worth of data or even 30 to 40 years worth of data so that I can find a conclusion on whether or not what I'm about to get into is of value and will continue to be of value as we move into the future. Now, on the trading side, it's more of a micromanagement, right? Just like Cody, Logan, and Austin have said, they are very specific with how they enter, very specific with how they exit. And what the strategy looks like for them is very much based upon whatever situation that they're moving into. And they could not potentially believe in the stock that they're trading, but they're capturing a upside move or a downside move in that very moment. We trade a lot of different stocks. That doesn't necessarily mean that we invest in them. So those would be the major differences for me on my side of the aisle long-term versus the other gentleman's side of the aisle on the shorter term. So taking that into effect, what I want to transition us into is market context. Now, I know you guys are probably very much in tune with the news. We've got interest rate hikes. We have very high inflation. We have supply chain issues. Commodities are going sky high. Gas, oil, everything is quite inflated at the very moment. And eventually it'll subside. This is not the first time that we've dealt with high interest rates. Not higher interest rates, high inflation. And this is not the first time that we've deployed interest rates over and over again post a very low interest rate level. So when we talk about market context, whether it's investing or trading, we need to understand what's going on during the day, whether it's CPI data coming out or whether the Fed is discussing current economic policy. Whatever that might be, we make sure that we are very much aware of any kind of events that could occur that could sway the market one way or another. Right now, the market's down quite a bit. The S&P 500 sitting around very close to 20% down, and the NASDAQ's about 30% down. So looking at those levels, we would say, okay, maybe we look back at the last 10 years, see how many times that the S&P's down has been down that bad. And then we can look and see if those levels that we've previously seen in the past, whether it was 08 dot-com bubble or other high interest rate times, we can look at what the damage was and what happened prior and after it all cleared up and the inflation got better or whatever that circumstance was that got better. So let me hand that off to Austin. I know that he and I talk about these events a lot.
Yeah, I talk about market context all the time. I actually made this visual for you guys. I hope you like it. And I think this kind of sums it up, right? Really being aware of everything that's kind of going around you, right? What is market context, right? Well, something could be in an uptrend. It doesn't mean that it's bullish, right? Essentially, right? You're paying attention to the news. You're paying attention to what's going on in a federal level, right? What is the government doing with any decisions they're making? Is there stuff going on with antitrust with some company, whatever, right? Paying attention to the news, paying attention to higher up decisions in the government, and also paying attention to what's going on, in the market itself, right? We can see over here on the left side, we have the news, the government stuff. And then on the right side, we go back to what's going on the charts, as well as like what's going on with the market sectors. You can see here my little scale at the bottom that I put. And that's just being aware of like what the big players are doing, what your market sector is doing, right? Really doing a lot of comparative analysis and just understanding all around what kind of state the market is in, right? Market context is extremely important for any decisions you're making within a market, especially when it's with your own money. So do not trade or invest if you have no idea what's going on, right? I mean, plain and simple. So I think people should be aware of that. Cody, Logan, I'm sure you guys have some thoughts, but.
Yeah, Logan, if you want to start, go for it.
Yeah, absolutely. So this is something that I'm going to bring up later in this call when we go over understanding your investment. But something that I like to say a lot is traders as a whole are data processing athletes, and market context falls into that category for me, because market context, at least how I envision it, is taking all of the data that you have, both fundamentally and technically available to you, and utilizing that to make higher probability trading decisions, or at least being aware of them. So for example, if you're trading oil, you need to know what's going on with Russia right now, because they're a large supplier of oil to Europe. Or if something's going on and you're trading the US dollar for some reason, or if you're trading US stocks and there's an FOMC meeting, you need to know that that's going to happen. Besides just fundamental news, Something we're going to go into as well is Candlestick Anatomy, buyer and seller aggression. That's a form of technical market context because it's kind of giving us a look into who's in control right now. For example, over the last couple of weeks, sellers have obviously been in control of the market when the market is now down close to 20%. So that having that context going into your day, you can now say, okay, sellers are in control. We are most likely going to continue lower should sellers remain in control. Obviously, buyers may temporarily take back control of the market like we saw the last couple of days, but overall, we're still in a bearish market. Short positions will most likely pay more. And those are just a couple of examples of how I'm taking in data to give us a better idea of more informed trading decisions. I think every piece of data you have is very critical information that can help you in some way.
Yeah, I mean, hey, I completely agree. I think as traders, our goal is to give ourselves the highest probability of success that we can get. So, it is, our duty to stay on top of what's happening in the world and up to date with all the news, because that can make a massive effect on what the market does the next day or even the next month or 2 months. So all of that is definitely very important. And I can see that we're moving over here into risk management, which is definitely, or strategy and execution, which is definitely a very important part. I think Austin, if you want to get us going on this one, that would be
awesome. This one would actually be me. Right before we go into the strategy and execution, I'm just curious if we have any more applicable tips we could give people for market context. Is there anything on the top of your guys' mind that
absolutely.
And I want to go back to market context. I don't want to move from that just yet. I love what you said, Logan. Like, why would you ever be trading oil right now or doing anything related in that market sector if you're not aware of what's going on over in Europe, right? I mean, you have to be aware of that stuff. If not, you're just putting yourself at a complete disadvantage to the rest of the investors and the traders in the market, right? It's information that you're not utilizing to your advantage. So that's a wonderful example of market context, right? If you're trading oil, you should probably be up to date about what's going on over in Europe, right? And I don't have to get too much into that. We know that there's conflicts over with Russia and Ukraine, right? We don't have to talk about that. But if you are trading commodities, it's very important to be aware and up to date with the situation going on over there. Is Logan frozen? Logan, sir?
I should not be frozen.
Oh, okay. Your screen is frozen, but I can still hear you. That's all that matters.
Well, Austin, just to add to that, one of the things that I wanted to cover is, guys, I've got a corporate finance background, and I talk about this in our live calls that we have every single day. I really like to focus on what the institutions are doing. They are the largest source of capital that is available in the market, and the folks who invest in them are just about the second largest. So these funds make very, very large moves. And as of right now, a lot of these major funds like BlackRock, Vanguard, any asset managers that I'm sure you all are familiar with, they're very heavy in cash, which means if they are very heavy in cash, they're not necessarily confident in deploying that cash at the moment. I know they're not worried about inflation. They're not worried about keeping heavy cash positions. So in regards to overall market context, you guys want to be sure to make to understand what it is that these larger corporations, these larger institutions are looking at, buying into, and they have to publicize it. Now, it may be a few days after then that they're posting and publicizing what it is that they're getting into and how they're allocating and what they're looking for. But you can kind of get an understanding by what it is that they're posting to their clients, sending out. If Vanguard's telling their clients that they should be buying right now, that most likely means they're trying to get more cash into the market to drive it a certain direction. Now, if everybody is talking about a potential recession or a much lower low in expectation of the S&P dropping lower, the overall market dropping lower, then maybe that would be a key sign that if you don't start legging in now, maybe you'll get another chance lower on into the market. So understanding what big money's doing, understanding what smart money's doing is a huge part of market context for me as well. And that's very important to what it is that I do on the long-term side of the aisle.
Absolutely. Absolutely. I just want to chime in real quick before we move on to the next topic. I see one of the people in the chat asked a question, why not trade oil when the world is short of it in Russia? Yeah, I'm not saying that you shouldn't trade oil. I'm just saying you should be aware of what's going on so you can make better decisions, right? Understanding market context, right? It doesn't mean that you should or shouldn't enter a trade or an investment, but you should be aware, right? That general awareness is very, very important. And a lot of people, unfortunately will enter markets without this awareness, and they'll pay their market tuitions for that, and that's never a fun thing to do.
Yeah. And to the person who asked that question, that's actually you utilizing market context to have a better idea of
Correct.
what oil is. So Awesome. Cody, do you have any other tips and like maybe a technical tip for market context? Any indicators you're looking at?
Yeah, I mean, I think as far as technicals go, my main thing when it comes to market context is support and resistance. Looking at, where is the market right now? Where are we opening? Where are we closing each day? Moving towards levels of value and levels of overextension. Where when we're moving up and it's clearly, that we've just continuously ripped and we haven't really seen a nice dip of 5-10%, whatever it may be. You can kind of start to get a feeling. You don't want to base purely a negative or a bear position just off of that. But that can definitely kind of be a sign that, we are starting to get overextended, or, same vice versa. If we're starting to fall, you can kind of start to see where, at least using the past charts and some of the longer time frame charts, where these zones are that we would have a support or a lot of value at. So that's kind of my main thing for technical fundamentals. I know you could bring in different moving averages and all of that, but as far as my main technical fundamental would definitely be support and resistance.
Awesome. And that actually brings us very nicely into our next section, which is going to be strategy and execution. And I will admit that strategy and execution is, the sexy part of trading that everyone tends to focus on when they first get started. And strategy is absolutely necessary for trading, and it removes gambling from your execution when it's done correctly. Strategy, how I view it at least, is a set of rules and parameters that must be met in order to form a trading idea. And if those rules are not met, then you simply do not trade. There's any number of things that can make up your strategy. And as you may be aware, if you're familiar with OBR, I'm a primarily technical-based trader, meaning my trading strategy is based off of technical indicators that you can view on a chart. Just making sure, is my camera coming through okay? Sorry.
No, your camera's having some issues, but I don't think it's a big deal. As long as we can hear you, that's what's important.
Okay, sounds good.
Yep.
Well, some things I am using in my strategy personally are momentum indicators, support and resistance, or supply and demand indicators, Elliott wave theory, which is a forecasting tool which allows you to read the movements of the market, amongst other things. And I want to hear from the rest of the guys about what they're using for their strategy as well, just to quickly touch on it. But the matter of the truth is that there are thousands of profitable trading strategies, and none are actually quote unquote bad. If you make money, then your strategy is good. It's quite simple. At OBR, we do teach many different consistently profitable trading strategies. And like risk management, trading strategies are quite individualistic, so they will not fit everyone's personality. I encourage you to check out a couple of different strategies and see what best fits your personality, and then stick with it. A common mistake that a lot of new traders make is strategy hopping, meaning they go from one strategy to another, hoping that it's going to lead them to riches. But the truth is that while your strategy may be good, the main battle of consistent trading is not against the market, but rather against yourself. So once you find a good strategy that you back tested and shows promise, I highly encourage that you stick with it. The best advice that I could leave you with is to follow the rules. In the past, I have quite literally used a checklist for my strategy to make sure I'm following my rules and parameters for each trade, and to ensure that I am not gambling. That is the main goal. Strategy is the only thing that really does separate traders and gamblers, and following your rule set will only result in net positive results over time. So with that, Clayton, I know you trade much, much differently than myself, and you are more so on the investing side, as we talked about. So I'm really intrigued to hear how you go about strategy and execution.
Well, I think you're unbelievably thorough with what you do, and I try to just do the same in my own regard. So for me specifically, on the longer term side of the aisle, what I'm looking for is not necessarily indicators. I try to make sure my capital is allocated or spread out through what I know will do well over the long term. And there's a lot of companies in the stock market. There's a lot of different things that you can invest into, but what shows stability and consistency over the long term is if I put something, or a company, or an ETF, which is an exchange traded fund, or a conglomerate of stocks. If I put a stock or an ETF or a mutual fund or what have you up on a 20-year long chart, is the overall direction from the bottom left corner to the top right corner diagonally facing the upside? If that answer is yes, with a few drops in between the beginning of that time frame and the end of that time frame, then that's most likely going to be a consistent return for you over the long term. Now, for that to fulfill that category, what I look at is the S&P 500 and the NASDAQ. Those have got to be two of my favorites. And when I look at them over the long term, they do very, very well. and they host a lot and the majority of the capital that is within our stock market. And they host the best companies within our stock market for the most part. So they are my most consistent return. And what I look for is very, very large moves in the market. Now, if I was day trading or scalping, I'd be looking for, maybe a 1 or 2% move in a day within the stock. If I'm looking to allocate into my long-term portfolio, I'm looking for a 5 to 10 to 20 to 30 to 50% drop, which we've seen in 08.com bubble and other major economic events. So I'm looking for major market moves, and I'm looking to lever in aggressively during those major moves. And if we get to a point where we've only seen, for example, if we get down to 50% in the market, we've only seen that so many times over the past 50 years. So I can very comfortably say that it's going to be an extremely high probability trade within the following year to leg in at 50% down. Same thing goes with a COVID drop, for example, or the drop that we're currently in at 20%. We don't see 20% drops every day. As a matter of fact, they happen very infrequently. Not even every other year do we see them. So this would present a great buying opportunity for me on the long term. And I focus on the S&P, the NASDAQ, their double, triple leverages, as well as mega cap securities that I feel like are innovative and beneficial to our future moving forward. So that's how I address my trading strategy, along with different options strategies that I implement to protect my downside and also accelerate my growth in the long term.
Yeah.
I love that, Clayton. And my favorite thing that you said there was essentially that you recognized a macro trend, and you're acknowledging, hey, whenever this macro trend has a dip, I'm going to start legging in, because historically speaking, the odds are in my favor, right? The probability of winning this trade is in my favor. So I love that. I just want to give a quick shout out to the visual right here, right? Because I love it. I don't know if anybody in here plays chess or has ever competed in any sports or competition or whatever, but trading in many ways can be the same thing from a mental standpoint, right? You have to figure out a strategy that works for you, that works against the market in certain market conditions, and that overall has is least or as minimal weak points as possible. And I play a lot of chess, so that's why I threw that in there. So just had to mention that. But yeah, my strategy is very similar to that of Logan's and somewhat of Cody's. I'm very technically based. When it comes to my day trading, I'm using a plethora of different moving averages, such as the 20, the 30, the 8, the 10, some exotic moving averages. Sometimes I'll mess with like a 17 or whatever. I love moving averages. I think everybody in here should use them. I'm also huge on supply and demand zones, right? Knowing where buyers are going to step in the market, and knowing when they're not stepping into the market. I'm definitely a fan of oscillators. I'm a fan of Elliott wave framework, as well as Fibonacci extensions and retracements. So a lot of the day-to-day analysis that I'm doing as far as my strategy and how I'm executing trades is based off of the technicals. But yeah, and then my long-term stuff is very similar to Clayton's, right? We're recognizing a long-term trend. I form conviction in it, and then I'm hopping in. I'm very bullish on cryptocurrency. That's where a lot of my conviction lies, whereas Clayton's conviction is in the stock market. So, our strategy and our execution is actually very similar, I would say, to some extent. But, we're just looking in different spots. So yeah, I mean, that's roughly speaking mine. Cody.
Yeah, I loved how you guys said kind of like a personal strategy, and how Logan mentioned that there's tons of successful strategies you can use, because in my opinion, I would kind of define a strategy as like your personal edge, kind of like your edge on the market, because everybody, we all trade at different times. People have different account sizes. Like there's so many different factors that can come in and kind of affect how your strategy should be based. So I think that's huge. But my personal strategy is definitely a lot of support and resistance, as Austin mentioned. And then I like to use price action. I believe price action is very big, using, 4-hour candles, 1-day candles, even 1-week candles, to kind of tell a story. And you can kind of get an idea when, based on how the candle closes and opens, on some of the future candles to come from that. And then, excuse me, especially if you combine that with support and resistance and other SMAs or EMAs, you can really start to get a good feel for different movements from zones and the kind of sentiment over the market, in my opinion. But I would say that's kind of my main strategy, but I do like to implement other things. Occasionally I'll use Fibonacci levels. I do like to watch options flow, and look at where the big money's going. And, there's plenty of different strategies you can use, but overall, my one that I've stuck with for the past 2 to 3 years has majorly majorly been support, resistance, along with price action. That's mostly been my strategy for the past 2 to 3 years.
Yeah. And what's the one common denominator we could pull away from this is that we all kind of have a different strategy, right? But it all ends up working in our favor, right? So like Logan said in the beginning, there's thousands, if not millions of different strategies. I mean, you could make one up out of thin air. If it works for you, it's a solid strategy, right? And so understanding, mastering that strategy that you build is very, very important to being successful in this market. So, make sure that you remember that. Back testing is huge.
Your strategy with paper trading is massive. I mean, I started with that for 2 to 3 months back, I think 4 or 5 years ago. I was just testing tons of different strategies, trying to get an idea of, what performed best for me. I mean, I've seen strategies work for other people, but that doesn't necessarily mean you're going to perform the best with that one. So finding what works best for you.
That's another thing, right? Sometimes one strategy might work for one person and it won't work for another, right? So got to remember that.
Absolutely. So, moving from something that is a little bit more flexible when it comes to strategies, because there's so many different strategies, I'd like to take us into something a little bit more universal, which is, in our case, risk management. But for here, we labeled it as protecting your capital, because that's really what it is. And protecting your capital has a very special place in my heart. Risk management is, without a doubt, in my mind, and I think in the majority of people's minds that are traders, the most important aspect of your trading. And, this is something that I've been saying quite a bit recently. It does not matter how much money you can make, as any one of us can gamble and make money. But what truly does matter is how much money you can keep. This will separate you from other traders. Your capital in trading, the money that you're trading with, is your lifeblood. And my number rule in trading is to protect your lifeblood. Without it, you are not able to participate in the markets. And if you cannot participate, you simply can't make money. So I can't stress it enough. Please learn and understand risk management and how to ensure that you will never put yourself in a position to blow up or ruin your account. We say in OBR, I hear Austin say, 12 times a week, no one trade should make or break you. And, I take that a little bit farther. I don't think any 5 to 10 trades should break you. If it's statistically probable that we incur losing streaks in trading, which is a fact, nobody can hide from that. For example, in my trading strategy, it's inevitable that I will incur 6 losing trades in a row. So if I know that if I'm going to incur a losing streak of 6 trades in a row, and if I'm risking so much on my account that after 4 trades, my account is gone, then inevitably I will lose my account. I really hope that makes sense. Risk management can be viewed in many different ways. Per trade risk is going to be the most important to day traders, and what we're covering in this call in particular. For per trade risk, I am placing 2 to 5% of my account on any single trade, depending on my confidence. And something I just wanted to quickly highlight is, that confidence comes from a grading scale that I employ, which is A to C scale. So like an A setup, if like you're getting a test back in school, right? An A setup is the best setup you can get. An A+ setup. A B setup is going to be a little bit less risky, and a C setup is going to get even less risk from my account. And the best looking A+ trades do not come around as often. Austin can agree with me on this. Cody can agree with me on this. But when they do come around, I'm more willing to place capital on that trade because it's a high probability trade setup. Besides per trade risk, we must also take into account correlation risk, meaning that if you're long SPY and Apple, for example, those two assets are extremely correlated with each other. So if you're long on both SPY and Apple, you essentially have double the position side on one single trade. And if you lose that trade, you're going to lose double than you would have planned to lose. So per sector risk is another thing to be aware of. I don't want to get too deep into this because we do cover this a lot more extensively in OBR. The moral of the story is that while it is nice to see how much money you could potentially make, in this market where nothing is certain, the number one thing on your mind should be how much money could I lose if I'm wrong? And make sure that that does not ruin me. And as you can tell, I take risk management very seriously, and I can completely attribute it to being in the market for as many years as I have been. But enough about me. Cody, I know that you, as a day trader, have some pretty similar risk management principles, and I'd love to hear about them.
Definitely. And I love how at the beginning you really kind of made sure everyone's attention was on how important this is, because at the end of the day, this is your lifeline. This is what keeps you trading. If your risk management situation isn't right, then you could definitely burn your account within a week, 2 weeks, especially trading these weekly options. And yeah, so when I'm trading weekly options, I typically will never put more than 3 to 4% of my account into a single play. And unless the confidence is, overly there. But for me, even I like to stray away from having that kind of confidence scale and over leveraging into plays, if I can. But typically 2 to 3% into each play, and I'm typically aiming for at least 50 to 60%, and letting some of my stops even go down to 40 or 50% in some cases. I like to focus on leaving runners, as well as in some cases scaling into positions, not entering your full position size right away. In many cases, it's very tough to time an entry perfectly. And these weekly contracts, with a very small move, can be down 20% right then and there. So that being said, I do believe in scaling in, as well as scaling out of positions. I think leaving those runners, and really focusing on that can be a huge difference in people's trading, because those can really move and bring you in some nice profits. But I know, Austin, you're pretty similar to Logan and I as well.
Yeah. Yep.
Sure.
I would say, yeah, you're a little bit more risky than me. You're looking for that 50 to 100% sometimes. I would say that, if I get a trade like that, I'm very, very satisfied. And people often in the server, they'll call me like the green goblin, because I'll take profits when I see them, right? I get very greedy in a sense. When I see green in my trade, I really have a hard time giving it back to the market, right? And I dislike that. So I'm always taking profits. And depending on the trade, my stop losses will be based around a technical point in the chart, right? So an invalidation level, if you will, of the idea. So that's mainly the stop loss for me. Typically that will range anywhere from like 15% to sometimes even upwards to 30, 35%. So I am somewhat lenient on my stop losses when I have when I have an idea that I have conviction in. But not everything plays out. You still got to manage your risk. It's very, very important to do so. You should never let anything run to zero in this market, right? That's just absolutely silly, unless you acknowledge it, right? Unless you're like, okay, I'm going into this trade. I know the risks of me holding this overnight, whatever, right? As long as you acknowledge it. But if you're not acknowledging it, right, and you're letting stuff run to zero or run 80, 90% down, right, you're gonna have a very hard time building an account from that. So it's very important to stay consistent and to continuously lock in green, right? You'll never go broke taking profits. And that's one thing that will probably stay true till the end of time. You will never go broke taking profits. And, the longer that you can manage that lifeblood and stay, have capital in your account, the longer you'll be around to trade and make gains. So very, very important. Clayton, you want to kind of tail off of that?
Absolutely. I think it's wonderful that I have these gentlemen with me every single day, because they remind me of all of these different rules that we know that we have to apply in the market, and the discipline that I know we must have, utilize, and deploy daily. So for me, on the short-term side of the aisle, my risk to reward ratios are extremely high. I am doing and I don't mean my risk, my ratios are very much in my favor. I try to risk as little as humanly possible to make the largest amount of return that I can. But that also means that I need to make sure that the probability of the trade that I'm getting into is as much in my favor as possible. Now, I know Logan said that he could lose potentially 6 trades in a row, and that's a probability for him with his trade strategy. For me, I can lose 5, 6 trades in a row, and I can hit one trade on a 20 to 1 risk reward. And I know that that'll blow out all the rest of those losses and then some. So I won't have to necessarily worry about that, as long as I can get to a point where I can get my proper entry and get the move that I need. On the long-term side of the aisle, I am truly looking for the lowest risk to highest reward that I can get of all that the stock market has to offer, plain and simple. And that naturally makes me a very conservative individual. I don't like to put up a lot of capital to do different things. Now, regardless of what capital I manage, I still have proper allocations so that I'm not over leveraging at any point in time, which means if anything goes wrong in my account, the only thing that could bury me is if the United States economy were to dissipate and we had no more economy left. That is the only thing that could bury myself personally. A bear market wouldn't bother me. 50% crash in the stock market wouldn't barely touch me. And I'm very happy to say that, but that's because I have a bulletproof implementation for what it is that I do. And I make sure that I can manage my risk, manage my downside, and take advantage of the upside that we would see, with any kind of market capitulation. So managing your risk is unbelievably important. And one of the things that we talk about every single day, we talk about, it's good to make money. It's good to win trades, good to have a 20%er or a 30%er. But if you take a 5% trade and anybody says anything bad to you about it, that you've made a 5% trade, have them talk to us, because that's not how it goes. If you risked 1%, made 5%, you're a winner to me. Because if you start scaling in capital to something like that, you'll be unstoppable. But what tailors into that is consistency. So that's what we're here to do and help and provide.
Clayton, and I love that you said that. I think these days, social media and just this whole thing around trading, this whole persona really glorifies the idea of like hitting that 100, that 1000% gainer, right? Changing your life overnight. But guys, that's just the sexy version of it. And that's not reality, right? If you really want to build an account, Clayton's damn right. You have to be satisfied with some small gains sometimes, because that's really the only way you're going to consistently build an account. I've never seen anyone ever consistently win 500, 600% trades over and over and over again, right? And if you're looking for that constantly, you're just going to lose the fight to the dragon here on the screen, right? And that's going to not be fun. So yeah, a win is a win. Green is green. Make sure to lock in the greens. Again, that doesn't mean that you should be locking in 1% when the trade idea still has a lot to run, right? You still want to make the most out of your trades, but have your expectations set with reality and understand how to actually grow an account. Because like I said, this thing that you see on social media with some places, it's like, it's not realistic. So if you're upset that you haven't made $1 million yet, don't be, because you're on the right path. Trust me. If you're in here, you're on the right path. Right. So
absolutely. Well said.
Definitely.
Sweet. On to the next topic. I believe we have. Awesome. Logan, do you want to start us off here?
Sure. And this is actually just something that we wanted to cover in the strategy and execution part. But as we were saying earlier, Cody and I and Austin as well, all of us use Candlestick Anatomy to our benefit. And all that really is viewing candlesticks on a chart via a candlestick chart. If you're not familiar with charting at all, this is the normal chart that you'll be able to find, a candlestick chart. They're first originated in Japan. But regardless, it shows the high, the open, the low, and the close of each candle. And by looking at these 4 levels, you can very clearly see if buyers or sellers were in control during this time period. Both of these candles happen to be the same size, but if you look at a candlestick chart, you will notice that no 2 candle is really the same size. There is a different high, a different low, a different open, and a different close for almost every single candle. For example, if a bullish candle closes near its open, then that will show us that it is, if it opens to the upside of its open and it's, farther away, that shows us that there's a lot of buying pressure, a lot of strength for buyers in that market, and vice versa for bullish candles. A little bit easier to showcase when we have more examples. Candles that open and close near the same level show indecision, shows that there's not a lot of buyers or sellers in control. But by looking at a candlestick chart, you'll be able to see, and also, go check out our YouTube, shameless plug to our YouTube. We do have videos on Candlestick Anatomy, and it'll give us a little bit more of an in-depth dive into what we're really talking about here. But candlesticks are a great way of gauging buyer and seller strength. If you guys have any other notes on that.
Definitely. Yeah. I mean, as far as candlesticks go, this is a very basic kind of, graphic for you guys, but we cover this stuff a ton. I mean, I know as far as Austin, Logan, and I, when stock is moving near a support and you start seeing some very bullish candles, so, candles that have a long bottom wick, the close is at the top of the candle, certain features like that. And, once again, as Logan said, there's YouTube videos on our website and all of that can explain this a lot better in a lot more detail. But candlestick anatomy is huge. All of this kind of comes into play and can give you a really good idea, especially when you're combining this with other indicators of what the stock's going to do, at least in my opinion. Austin, I know you were about to say something. Sorry to cut you off there.
No, you didn't cut me off. Candlestick anatomy is extremely important. And I know it's just kind of one random thing we're kind of picking out here regarding all the stuff that you could look at when it comes to visualizing a asset, stock, equity, any financial instrument. But candlestick anatomy, broadly defined, is one of the most important things that you can be looking at. If you guys are not looking at candlesticks, I highly recommend putting that on your chart. I know a lot of people use like Heikin-Ashi candles or a line chart or a bar chart. I definitely recommend that you, in my opinion, use candlesticks, because the anatomy of a candlesticks, and not that the other ones are bad, but the anatomy of a candlestick can be extremely important, and can often influence trading decisions, where all the other things might disagree, right? And I encourage you, when you take time, take some time out of your day one of these days to go and do your research on candlestick anatomy. Look at the different types of candlestick patterns, whether it be a bullish hammer, right? A sell-off, like Logan said, a doji, right? Indecision. I highly recommend to go research those things because they are crucial in understanding market price action. So candlestick anatomy, very important.
Help paint a picture on our chart.
Yes, it paints a picture. It
Just
says a story.
Just to add something very quickly. So I used to be an outsider OBR looking in. These three gentlemen helped me increase my long-term strength and understanding of technical analysis by just describing to me what these different candlesticks looked like. Now I had a relative understanding, but I didn't necessarily think that candlesticks would play a major part in my long-term technical analysis of what it is that I was doing. And they've provided a phenomenal understanding of when candles are getting bought up aggressively or when they're full on bearish based candles. So there's a lot that goes into this candlestick anatomy, and it applies to every single time frame and anything that you may or may not be doing. So something to just take into effect. I used to be outside of OBR a long time ago, almost a year ago, and outside looking in with Cody, Austin, and Logan, they've taught me a ton regarding this principle. So as a potential member or somebody might be interested in our server, this is just one of the many things that I've learned as a portfolio manager and as a day trader. That's where I started, from these gentlemen, and I'm very happy to be here with them today. So that's just another point.
Wonderful. And guys, we will be able to answer questions here at the end, but we do want to just kind of get through these next few topics. As I do see there are a few questions.
Would you like us to lead us into understanding your, actually, no, sorry. First, we're going to go into execution platforms. Mr. Cody, I believe that's you.
Yeah. I mean, hey, execution platforms are your connection with the market. This is how you're going to execute your trades, buy, sell positions. This is very important as well. So, I think the most common ones are TD Ameritrade, Thinkorswim, Robinhood, and Webull would probably be my top three most common that I've seen. And then, with those, Robinhood and Webull are somewhat similar, both kind of free trading commissions. They start you out, I believe, on a PDT for both, if you are under 25,000. And then they have pretty simple user interfaces for the most part. And they're great for beginning traders. But at the end of the day, in my opinion, if you're really trying to make this a full-time thing, it doesn't give you all the tools that you need to become, a very successful and consistent trader. I know many of us on this board and panel use Thinkorswim, TD Ameritrade. I know Austin uses TradingView for most of his technical analysis, which is a beautiful platform, makes it really all nice and clean. But personally, I do most everything on Thinkorswim. And kind of to dive in a little bit about what I was saying earlier about PDT. So if your account is under $25,000, the stock market rule is PDT will only allow you 3 day trades per week. So what that means is you can only buy and sell a stock or an option within the same day 3 times a week. And if you do go over that, many of these platforms will actually lock you out, which can create some quite stressful situations where you might not have the ability to liquidate a position, and you really need to do that in some cases. So that being said, I think with Thinkorswim having the cash alternative, having a cash account where you can, make as many day trades as you want, but you do have to wait for your cash to settle. I think that is definitely a much more viable option, at least for what we're doing here at OBR. And I personally have been a big fan of Thinkorswim for the past 3 to 4 years. It's what I started on. I have given, a few of these other applications and programs a go, but I've never found one that gives me as much tools and success as Thinkorswim does. But I'd love to hear what I know all of you guys, I believe, do use Thinkorswim. And Austin, I'd love to hear about TradingView. I know TradingView is awesome.
Well, Right. Yeah. So let's touch on that. I actually love Thinkorswim and I use it every day. I use Thinkorswim to execute my trades, right? So whenever I'm going to make a trade, I'm going on to Thinkorswim to their options chain, and that's where I'm making my decisions. However, where I conceive my ideas and where I do all my analysis is not on Thinkorswim. I will say though, Thinkorswim has a wonderful charting platform. I think there's nothing wrong with it. A lot of people love it. I know Cody loves it. Clayton loves it. And a lot of really, really smart people that I know use Thinkorswim for their analysis, as well as news analysis too. I know that there's a wonderful news feed on Thinkorswim. I believe I don't utilize it too much, but I know it's there. So yeah, Cody said, TradingView is another wonderful platform where you can do your charting. It's a technical analysis platform. I believe you can also make trades on there. I don't execute my trades on there. As I said, I execute my trades on Thinkorswim. But yeah, a lot of my analysis is done outside of the brokerage on TradingView and stuff like FinBiz and even social media like Twitter. Twitter is a huge resource for me. But it's very, very important that you understand your native brokerage, right? Because you want to be able to execute and kind of move efficiently through there so you can take the trades that you want when you want, and kind of what you're getting into. Because it's pretty bad if you have a wonderful trade idea, but you're like, crap, how do I do this, right? How do I properly make this trade idea come to life, right? How can I enter this trade properly? So yeah, very important to understand how to use your platform that you're trading on. And, you don't have to go use Thinkorswim. A lot of people use Webull. A lot of people use Robinhood, and some people will have their beefs with it and some people will like it. But, in my opinion, while I don't like some of those other platforms, as long as you are, coherent in the ability to understand your platform, you'll be much better off than a person who doesn't. So just make sure that you understand anything that you're trading on. And that can also be used, wonderful for paper trading. A lot of people use paper trading to test their strategy in the market. But in fact, paper trading can also be used to practice your platform, right? Like, how can I properly execute these trades? How can I navigate here and do a bunch of things? So yeah, very important to understand what you're trading on.
And for me, this is a very, very personal topic. I have been working with TD Ameritrade for years now. And now I have multiple different companies that are based out of TD Ameritrade's brokerage house and partnered with TD Ameritrade. So I am a huge fan. I don't get anything for pitching them, but I will pitch what I respect. And what I respect is incredible customer service. They're accountants, lawyers, they're advisors, everybody. Now, I'm not a big financial advisor guy, but overall, TD Ameritrade has the best customer service of any company that I've ever worked with. I've worked with Amazon. I've worked with multiple other companies, corporate finance companies, and I have never been taken better care of than with TD Ameritrade. And their platform provides you just about everything that you would need. Now, again, guys, just to break it down to the foundation here, TD Ameritrade is the broker, and Thinkorswim is the software-based trading platform that they provide to you all. Now, I know Austin mentioned paper trading. If you start a cash account, now there's two accounts, and I personally have LLC based accounts. I've got retirement accounts, individual accounts, a margin account, a cash account. And talking about margin and cash accounts are very simple. If you have a margin account, you are allowed 3-day trades because you don't have $25,000 in that account. Now, if you do have $25,000 or more, you are free to trade as much as you would like within a margin account. With a cash account, you can trade up to as much as the cash you have available to deploy in the market. So if I have $1,000 in a cash account and I take 5 $200 trades, I've utilized the full capacity of the available cash within that account. I wait for the next day, the cash settles, and I get to reuse that for the following day. Now with margin, it allows you to consistently replenish your capital as long as you're above $25,000. And if you're not, you're restricted to 3-day trades, or you get hit with what Cody was talking about, the pattern day trading rule, which is PDT, which means it's the financial institution way of telling you you don't know what you're doing because you're not trading with enough, and we're going to limit you so that you don't lose your money, which I don't believe is their choice, but I think that's ours. But we do our best to educate you so that that's not going to be the situation at hand. So overall, TD Ameritrade's been incredible to me. They offer you hour to multiple hour long sessions. I have LLCs with them. So I have consultants that I work with directly that help me with everything I have ever needed. And they offer once a month to get on a call and just to update me on anything that they feel like could be beneficial to my day trading, my scalping, or my portfolio management modeling that I'm constantly updating and making sure that everything is squared away on that end. And they've got incredible resources to take care of me comprehensively. So big fan.
Awesome. I did want to just quickly bring up some Canadian brokers because we were getting some comments regarding those. Interactive Brokers is going to be the most prominent and the one that I would recommend. I have used Interactive Brokers in the past. Others include Questrade, Qtrade Direct Investing, and TD Direct Investing. I'm not sure of the limitations of those platforms, but I know Interactive Brokers to be an exceptional platform, just a little bit tricky to get used to. And that's probably the most important thing if you guys are new to trading. That execution platforms can be tricky sometimes, especially if you're new, especially if you don't know limit orders versus market orders, especially if you don't know bid and ask spread, especially if you don't know where to look to place your trade or how to close a trade properly, right? This can all be very frustrating things. I highly recommend doing what Austin said. If you're new to the platform, go paper trade and get used to it just so you know what you're doing, because the worst thing that could happen is you get into a great trade and you end up losing money because you don't know how to properly execute the trade. That would be terrible. I myself have had a lot of experience with different execution platforms because of my time trading Forex. I worked with a lot. Since I transferred over to trading options primarily, I did the same thing that Clayton did. I had a 1 hour intro call with the gentleman over at Thinkorswim, their customer service reps, and it was amazing. He walked me through everything I would ever need to use and much, much more than that. So I highly recommend, if you do use Thinkorswim, which I think we all can safely say we all recommend that you take one of those calls because it's free. It's an hour long. You get to know everything you need to know. I've heard a lot of people using Webull. I've heard good things about Webull. I can't say I haven't. I have heard better things about Thinkorswim, and I've heard things about Robinhood. And, I understand that it appeals to the newer investor because it gives you the nice sounds when you do things, and, it's got a nice user interface. But besides that, I'm not sure if it is the best exchange to be using, the best execution platform to be using. So just do a little bit of research for yourself into those three main ones if you're in the US, or Interactive Brokers if you're in Canada. But we can all safely recommend Thinkorswim for sure.
Definitely.
So to add on to that, if we go through our platform, understand how to utilize it, understand how to get into options trades or buy shares of stock for my or your future, or to trade something short term so that we can create additional cash flow for ourselves, whatever it may be, that transitions us into a bigger question that encompasses our entire conversation today. And that is understanding what you're buying. And that's understanding what you're buying, what you're trading, when you're selling what you've bought. And after you've gotten through the execution platform and you understand how to buy shares, how to buy calls, how to buy puts, getting into spreads, whatever it may be that interests you and whatever you think is best for yourself, which is why we're here to help guide you along the way, you need to understand what it is that you're putting your capital into. Austin mentioned earlier that he's got a lot of his long-term in crypto. I have a lot of my long-term, actually almost all of it, about 98% of my net worth is in the stock market, because that is where my conviction lies. Because I have years of experience both in corporate finance, within the stock market, and I've done a ton of research to make sure that I have an unflinching amount of confidence in what it is that I'm going to be putting my capital into. Now, that being said, there have been times in my career where I felt like I've understood what it is that I'm going to buy, but I haven't gotten the whole picture, whether that's the technical picture, the fundamental picture, something happening to the company, something happening to the cryptocurrency, whatever it may be. So that ties us into our risk management. That ties us into how we allocate our capital. That also ties us into how long we're going to be in a trade or an investment. So when you're looking to understand what you're buying and to develop conviction, which means I know I'm going to put a large amount of capital into this, and I know, or I'm almost certain, I'm 99% certain that this trade or investment is going to play out exactly like I want it to within a relative time set that I've laid out for the trade or the investment. Now, we could talk about individual securities. We could talk about companies. We could talk about ETFs, which are a little bit safer than companies. But if I say to myself, I'm a huge fan of Elon Musk, I love electric vehicles. I believe electric vehicles are the future. Whatever the belief may be and whatever the conviction may be, just make sure you're getting into the highest quality representation of that conviction. So that goes for your trading. Now, that being said, if I trade Bank of America and I don't hold it long term, that means I don't want it to be a part of my long-term horizon or my long-term annual return that I'm looking for. But if I see that Bank of America is providing me a move that would satisfy a short-term goal that I have in mind, then that's what I'm going to go after. So it's about opportunity, taking advantage of that opportunity, and also comprehensively understanding whether it's going to be an opportunity for you and provide you upside, or if it's going to be a risk that could potentially provide you downside. So those are the biggest things for me. And I know these gentlemen are more on the shorter term side of the aisle, but this applies to everything that we're doing, whether it's on the portfolio management, the day trading, the scalping, whether it's in real estate, whether it's in building a business, whether it's in the stock market, crypto, it does not matter. This applies to everything you do in this world, truthfully. So I know the other gentlemen definitely have some points on this.
Definitely.
Yeah. Go ahead, Cody.
Yeah, I mean, hey, understanding your investment, I completely agree. That is a very major part, once again, of, what you're buying. If you don't really understand that, it's going to be hard to succeed with that and hard to make a strategy around that, hard to make an execution strategy if you don't even know what you're buying is going to do. And that can kind of, if I was to give it a specific example, would kind of come down to like different expirations on contracts. With options, at least, if we have a weekly contract compared to a monthly or, even a year out contract, those are going to move so differently. And kind of based on my risk management, I'm going to have a completely different risk management strategy when it comes to playing those different kinds of options, as well as some of the Greeks. And that'll get a little more in depth. And I know we talk about that more in the server. But Greeks on the options are huge. You have theta, delta, all of these can make a very big impact on your position and how you're going to make your strategy around that. So understanding your investment is massive. There are plenty of different types and kinds of investments that we take at OBR. So understanding that and kind of getting a feel for those is definitely a big thing.
Love that.
Go ahead, Logan.
Okay, sounds good. No, I mean, I agree with everything these two gentlemen just said, especially when it comes to longer term investing. I think it's necessary to completely understand your investment. And then when it comes to day trading, like Cody said, it's very important to understand all of the Greeks that we have in options. It also should be important to understand, again, this is what I was talking about earlier, data processing athletes. I think that understanding your investment brings us back to this concept, which is just trying to gather as much data points as possible. So if you are trading Apple in the long term, you need to know, well, this is just a general idea. Most of us know what Apple is, but you should know where Apple's located, where are their main suppliers, what's their mission, right? What are they doing? When it comes to cryptocurrency, me and Austin talk about this a lot. You should look into your favorite crypto and read the white paper, read what the protocol is. What does the protocol do? How is it built? How many nodes does it have to keep the protocol running? There's a lot of different things that people should be taking into account just to try to get as much of a clear picture as we can in either our investment or our day trading. I do think that this topic relates more to our longer term investments, but it's absolutely applicable in our day trading as well.
I agree, Logan. I think it is. I think it's applicable in both sides, both short and long term. However, I do lean more long term when it comes to understanding your investment, because that's in your long term investing. That's where your convictions are going to lie. And I know Clayton talked about it. He's like, well, if you like EVs, go do research on the EV sector. Find out who's doing EVs the best. You know what I mean? And then ride with those guys. So yeah, understanding your investment is huge for me. That's what I put a lot of time every day into doing. Like one of my passions is researching cryptocurrency and the cryptocurrencies that I invest into. And, it's a little bit, it's difficult when you're looking for stuff that is smaller market capitalization, because you have to really put in that extra research. Investing into Apple for many people, I mean, I guess you could get away with not understanding it, right? Because Apple is one of the most hyper successful companies of all time. It's a blue chip. It's the largest market on the stock market, or its largest company on the stock market. And maybe you could get away with that. But anytime, even with Apple, anything that you do, you should put a good amount of your time and energy into understanding what something is, right? So yeah, no matter what you're investing into, whether you're trading or investing, you should 100% understand everything that you're putting your hard-earned money into. And that's really what it boils down to. So
just another point to bring up, guys, another way that you can do your research on these different companies, and specifically Austin brings up Apple. If you're curious about Apple and you understand, hey, great company, great phones, great product, great hardware, great software, all the above. Another thing you can do is you can look at who owns it. You could Google right now, who's the largest shareholder of Apple? Who's the second largest? Who's the third largest? Who's the largest shareholding individual, not just an institution or a company? And then you can look that up. You could look that up for various different companies and see who's backing it, and see where who's got their money where their mouth is, right? That's a big point of topic for these different companies. Now, if you've got a small company and you've got one executive who's buying in and out of the company, manipulating the stock, that might not be the most credible place to put your capital. But if you've got Apple and you know that Vanguard, BlackRock, Warren Buffett, some of the greatest institutions and investors that are available to the public, well, so to speak, won't go into that, but they've got all their money in them, then usually they're going to be too big to fail, quote unquote, and they're definitely going to have a lot of financial backing.
Yeah. And speaking of Apple, I know we I don't want to get off topic. Michael Burry with a very large short position against Apple. We'll see how that pans out, man. We'll see if Michael Burry could take a win over Warren. But yeah, Apple, interesting topic.
Talking about short positions, our analyst in here, Cody, just hit an absolutely amazing short on SPY today.
Yeah, Cody, go ahead and walk us through that real quick.
Yeah, I mean, I saw us moving down at the beginning of the day. My main line was $400 on SPY, and I was kind of just waiting for us to lose that level. Once we did, I entered some $400 puts for the daily, and we started moving down nice.
Very aggressive.
Pretty much locked in some profits when we hit my first price target of 398. From there, it was just kind of letting us see where we were going to move. Obviously, I had my exit plan after that if we were to move back over and, kind of get back above 400. But we never saw that. Kept being pretty bearish. So, yeah, we ended up taking 270% profits on some of those. And
congratulations.
Appreciate that.
Very good.
Yeah, still got some runners. So we'll see. I think there's a small potential that we can continue down maybe to 390 by the end of the day. So we'll see.
Yeah. Today's been pretty brutal. But back on course we go, right? I believe that was all the topics, if I'm not mistaken.
Right here.
Cool. Yeah, guys, give us a follow on our socials. Essentially every single social media website you go on, you just type in that right there. We should pop up. There's a lot of fakes out there, so beware. It needs to be that exact spelling that you see at OBR Investing. Don't fall for any scammers. OBR will never reach out to you. They'll never DM you asking for whatever. Completely ignore that, as there are a lot of them. And, we'd love to completely eliminate that problem, but I don't know. It's impossible. There's so many. So be aware.
We're on their asses for that. But great presentation, guys. Right now we're running a little bit over just an hour, but we're going to head into a Q&A. I know there are a few questions in the chat that did not get answered right away, so we're going to ask you to throw them into the Q&A section. There should be a little button at the bottom of Zoom. And while those questions are flooding in, I would like to say that these kind of conversations that you hear analysts have is just kind of a snippet, a 1 hour snippet of what they do every single day. And I mean, I'm about to let Clayton get into that a little bit more, but right now in this webinar setting, the conversations is a little bit more limited within Discord, which is our primary platform. It's a lot more open. So Clayton, if you want to get into that a little bit more, go ahead.
Oh, absolutely. So guys, we have multiple different parts to our server to make sure, and this is my ultimate goal and the sole reason why I chose to be a part of OBR myself. I want to make sure that we are as comprehensive as possible. If you come into our server and you go, I'm trying to learn about call options or put options, or I'm trying to learn about long-term, or I'm trying to figure out a strategy for day trading and scalping. I'm trying to figure out a strategy for cash flow. I'm trying to make sure that my children are covered and cleared and squared away for when I'm 30 or 40 years old and, they start to grow up, and I want to make sure that their 529 plans squared away. I want to make sure that my business is underway and that I'm also investing the cash flow that I'm getting. Whatever that may be, we have a plethora of experience between all of the analysts, including myself, that we provide every single day. We are always open to questions. We are always open to live conversation, whether it's in our live calls or throughout our chats. And we do this all day, every day. We take a lunch break. You know, I'm a hungry boy. That's the way it gets. But other than that, we're in there pretty much the entire day, every single day, so that we can make sure that we are providing you all of the information that we are getting, that we are utilizing, as well as opening conversations with members of ours that are very experienced traders and in there every single day. We've got, between the two live calls, we've got hundreds of people, that are in there every single day with us because they understand the value of what it is that we are doing our absolute best to try and provide. Now, that being said, if you guys have any questions or if there's anything that you'd like us to cover, you can absolutely go ahead and do that. We do this every single day, every single morning. We're in there in pre-market, going over the market, addressing what's going on in the economy. And then on our socials, we help present a little bit more of that information through the IG lives, as well as our bi-weekly calls that we have. We cover multiple different educational topics, and we do this quite consistently, and we will not stop doing it anytime soon.
Very good. Very good. So Brian, I can go ahead and just answer live under these questions, right? Will they like pop up?
Yeah. So do you see that list of questions right in front of you?
Yes, I have them right in front of me. Yeah.
Yeah, go ahead. Just go down the list.
Okay. Do I have to answer live or should I just read them out?
Read them out, answer them live. And
okay, because there's a button that says answer live, but we'll just, or what if I press this? What happens?
There you go.
Okay.
It says Austin's about it. Yep.
Okay. Well, okay. Yeah. Where's the TikTok guy that advertising this platform? That's Griffin. He's not here at the moment. But you know, if you hang out in the OBR server, you'll definitely see him around from time to time. He's a cool dude. I like Griffin. Onward. That answered that question. What stocks do you recommend to trade for a beginner to make gains? That's a good question. That's a good question. So when you're a beginner, and I want to hear from other people, again, we're not going to spend too much time on these questions. I want to kind of just chop through them, but this is a good one. As a beginner, right? A lot of people come into the market with like $100 or like $200. You know, I definitely recommend coming into the market or trying to build a larger portfolio before you hop into the market, because you're just setting yourself up for failure. You want to work from a place of abundance rather than scarcity. So, you know, a lot of people will try to, you know, beginners will be like, oh, let's trade American Airlines because the contracts are cheaper, right? Or whatever. That's fine, but you know, don't let the price of contracts or the price of anything deter you from trading, right? That shouldn't be a reason that you should or shouldn't trade something. So I just want to make that clear. But for beginner traders, I mean, trading the S&P 500, trading really any blue chip equities is really where I would start. I would stay away from penny stocks. I would stay away from stuff with not a lot of volume, and really just staying with where the volume is, right? That's going to be your best bet, because you're going to get better fills. Your spreads are going to be better. When it comes to trading options, your whole world is going to be a lot easier if you stay with more prominent equities. So that's my take.
Yeah, I would say volume for sure. Volume's huge. Trading something with not a lot of volume, you can get messed up with spreads. It'll get confusing. All of that can just kind of make it more of a hassle on you. As well as, you know, understanding your account size. That kind of goes back to understanding what you're buying. If you don't have that big of an account, then you definitely want to stick to smaller options, smaller or lower stock prices. Ford. Ford's a great one. American Airlines is another one. A few of these that are still high market cap stocks, but they don't have that crazy share price. You can get really cheap options on those. So that's my little bit of input.
Yep. And hey, we're seeing some stock splits coming up soon, so maybe it'll be better across the board, right? In the tech sector. Something to look forward to. I see Clayton cheering on over there. So moving on, we only have around 20 more minutes here until we close up, so we want to be quick. Cool. Anand. Hey guys, I've been trying to get started with y'all, but I'm having some trouble getting clearance to trade options on interactive brokers. I was told on Instagram that there are some Indian traders in OBR, so if you could just ask them which broker they're using to trade options, that would help me a lot. Thanks. Yeah, I would definitely still try to mess around with interactive brokers, as that's our number one go-to brokerage for people internationally outside of the States. But I'll have to do a little bit more research regarding that. So unfortunately, at the moment, I don't have an answer for you. My apologies. Cool. Moving on. How credible is TradingView automatic technical analysis? Logan, go ahead. You can answer that one.
So I don't know of too much automatic technical analysis tools on TradingView, but the ones that I am aware of do a decent job. And if you're new, they absolutely can help. But I highly recommend and encourage you to learn how to do the technical analysis on your own so that you have a better understanding of how it works and you can get a much better and more effective whatever it is you're trying to draw, right? An LE wave count, a trend line, whatever it is. I highly recommend you try to learn how to do it yourself. You'll identify the more relevant ones that you need to be aware of rather than just relying on TradingView, which sometimes definitely does mess up.
Yeah. So again, right, you can use that stuff, but you should be making an effort to understand how this stuff works independently of, yes. TradingView just applying it for you. So make sure you do that. So I would not give too much credibility to those, me personally. Some other people might though. Cool. Is there any strategy to follow OBR alert? So I'm not sure what that question means. I think it means like if you are to follow, yeah, go ahead.
Just like if like an overall, like if there's a method of greater success when you're following our alerts. I mean, for the most part, we've done a pretty good job of alerting exits and entries. So my main thing, at least in my opinion, would be to play smaller than you think. I see a lot of people join in and, they definitely over leverage. They're not like too confident in their risk management strategies and all of that. So my personal opinion, just the easiest thing to say would be play smaller than you think. Once again, I do think most of us do a pretty good job of alerting exits, profit taking and all of that. So as far as strategy goes, I think it's pretty self-explanatory, but definitely just play a little bit smaller than you think.
Yeah. And that's kind of the discrepancy we talk about, right? Just because someone's strategy works for one person doesn't mean it'll work for you, right? So you definitely want to come in with an open mind, kind of look how things are working, see which analysts you like, right? Every analyst in OBR has like their own player card, quote unquote. So definitely check that out, right? They all have their own unique styles and maybe you can find one that kind of correlates closer to you. So come by the OBR server for more information regarding that.
Yeah. One quick thing on that. We do have a bi-weekly educational call on our YouTube that I just asked somebody to throw in chat. So I hope that is in there soon, but it is full. Actually, I'm going to put it in right now. It is setting up for success in OBR. So this will provide some more insights into that as well.
Wow, you're really giving them the sauce today, Logan.
Giving them the absolute sauce. Yes, sir.
Some lucky folk. All right, moving on. For me, Robbie, hello, Robbie Cordish. For me, I just don't understand enough when y'all have live option callouts. I'm not even sure how to place one. Completely ignorant to options, but really want to learn it. I've watched all of your videos too. Just some of the terminology I do not get. Cool. So that's just the learning curve of anything you do in life, man, right? It's going to be kind of overwhelming at first. I know when I started option trading and when I got into investing, I was kind of overwhelmed. I was like, where do I start with this whole thing? And it kind of just led me down the rabbit hole of constantly on YouTube, doing research, talking to people, right? Talking to people is very important. I talk to these smart people on the panel every single day and I learn a lot from them, just how I'm sure they might learn some stuff from me. But it all comes with time and experience. It's not like there's like a light switch thing where it's like, oh, I understand this now. It takes time. In growth in this market, as much as I hate to say it, it's not sexy, right? It's not like you're just going to understand. You're not going to be like walking one day and then all of a sudden you just get hit with this enlightenment. You're like, I get it now. I get it. No, you have to work hard and it takes time and experience. So you'll get there if you want it bad enough, right? Persistence. Anybody is capable of doing this stuff. You just got to put in the work. I'm sure these people will, on the other analysts here will agree with me.
Definitely.
Absolutely. Very good. Very good.
Surrounding yourself with a community of like-minded individuals and people that all want to help each other grow is huge. I think that's
huge.
That's one thing I did, kind of a little bit later in my trading career, like probably 2 years-ish, I was already into trading. And then I finally did that. And the growth from there was exponential. It was definitely much better.
Awesome. I'd like to throw something in there as well. Also to kill two birds with one stone, there's a question from Oliver who said to get a solid understanding of how to day trade, how long would it take? I'm definitely one of the newest traders here. I don't trade. And I would say for me to understand the logistical side, probably a couple of months. Still getting there. It's been about exactly a year and 2 months, but the hardest part for me was managing the emotions. And that's something that's, in my opinion, a much larger factor than understanding the numbers and terminology. Understanding your own emotions is quite a bit.
Yeah, huge. I was going to say something, but it left my head. All right, moving on. Well, it'll come back to me. I'll remember it. what stocks do you recommend when growing small accounts? We kind of just talked about that. Staying on with that blue chip, the blue chip equities is really where you want to start, right? You want to trade where there's volume. Robbie, like when they say, here's our price target and here's where we expect, but we have runners, what does that even mean? Yeah, so there's a take profit level, right? Like CODY took profits on his SPY puts today, but he left runners, meaning that the position, part of the position of the contracts he still had going are like at no risk, right? Even if they went to zero, he would still be in profit in the position. So that's what a runner is, right? It's like a free contract. And those can take on obviously a lot more risk. You don't need to really manage your risk with runners. So we'll answer that. What is the best European broker for options and stocks? Interactive Brokers, my friends. Interactive Brokers. Alex Abba, how much is your service? $35 a month. $35 a month. So just over $1 a day. I think that's a pretty good deal. I think that's a pretty good deal.
Cheaper than your yeah, cheaper than the Red Bull you buy on your way to work.
Yeah, it's actually or the coffee that you get.
Or coffee, whatever it is. Whatever you buy on your way to work.
It's actually it's actually comedy. I know some people in OBR investing that are paying 35, everybody's paying $35 a month. But I mean, some of these people are really raking in the dough, like making tens of thousands, if not hundreds of thousands of dollars every single month, and they're only paying $35 for it. So sometimes I'm like, the deal to me is just like through the roof, incredible. It's actually doesn't even make any sense sometimes. So yeah, $35 a month, can't go wrong. Anonymous attendee, do I need a college degree to learn how to trade? Absolutely not. Absolutely not. We actually have multiple people on the analyst panel who have no college experience whatsoever, and they're some of the smartest people I've ever talked to. So nope. Hey,
we have college experience. We just didn't graduate.
Fair. Okay, good. Thanks for the correction. So yeah, they're not complete idiots, but no. Cool. So you do not need to. You get the answer. You don't need to go to college. Baker, how long did it take y'all to become consistently profitable day traders? So I think it takes a while. Oh, I remember what I was going to say to Brian. We're always students of the game, right? Everybody's always learning. You're never going to be like as much as you'd like to think so, right? I mean, it's almost impossible to master anything, right? I mean, go look at any sport that people play. For baseball, for example, there's people who dedicate their lives to baseball. From the moment they were born, they go to the MLB, they're even really good in the MLB, but that doesn't stop them from like striking out 3 times a game sometimes, right? Everybody has their slumps and they're always learning, right? There's always kinks they got to work out in their swing, their throw, right? How they're managing their health, what they're eating, right? So they're always students of the game, just like how we are always students of the game. I would say it takes a little while to become consistently profitable. There definitely is a learning curve. I would say, it took me almost a year to really get comfortable with how I'm navigating the market. And I know that sounds kind of overwhelming to some people, but, I would say a year. Maybe some of you guys have other thoughts.
I was 15 when I started, so I wasn't the smartest. And
probably took CODY a little longer when he was 15.
It took me till I was at least 17 or 18 before I started really kind of diving into the profitability.
Yeah, when I was 15, I was running around like a lunatic, not looking at the charts. So yeah, you have a step up on me already with the experience. Good on you. Logan's been trading for a very long time as well.
CODY beats me. CODY
beat you. Wow. CODY beat you.
I started when I was 16, so he beat me by a year, maybe a couple of months.
Jeez. But we have some vets in here.
But it took me about a year and a half to start trading consistently. I would say it took me 3 years to start trading very profitably. There was a time when I started to just like break even on the months, maybe a little bit green, and then it consistently got better after that. But that took about a year and a half.
Yeah. And guys, and this process can be different for everybody else, right? It matters how much time in your day are you spending to learn this stuff? Because if you're spending 1 hour a day to learn this stuff, it's going to take you a lot longer compared to the guy who's spending 7-8 hours looking at charts every single day, right? He's going to kind of go over that learning curve much quicker, right? Same thing with like chess, right? If anybody here plays chess, if you play chess for 10 hours a day, you'll get pretty good at it, right? Better than people who just play once every so often. So the more time you put into it, the quicker that, you'll become profitable.
On top of that, I mean, that's probably why I find myself struggling trading a lot, because I'm doing work, school, trading, if this is seriously a full-time thing, I know the analysts will get behind that. To get profitable, especially in a year, 2 years, definitely kind of a full-time mentality. not a part-time thing.
Well, Brian, you've taught
Oh,
me
geez.
more. You've taught me more than a lot of other people in OBR, purely because you helped me understand who I am as an individual, right? I know you're new with the trading, but the psychological element that you provide to all of us helps us kind of keep ourselves in line and really understand what's going on, what's bothering us, what we're doing. I know you're human as well, so you share, you share what's going on with your person, but I think it's incredible what you provide. And on the marketing side, second to none.
Appreciate that.
Brian is a beast. Yep.
He is.
All right. On to the next question. How did you approach trading and how rewarding is it compared to other financial works? So when you say, you mean like other ways to accumulate capital? Like why trade when I could go work a job somewhere essentially? Is that what the question is?
Maybe like being a financial advisor or an analyst for a firm or something else within a corporate finance realm or finance as a whole.
Yeah. Yeah. Well,
I could answer.
Go ahead, Clayton. Yeah, go ahead.
Okay, so guys, this is a very personal question from me. I worked in corporate finance. I started out day trading, and I realized two things. I realized that even if I were to become a profitable day trader, it was not my most favorite thing to do in the world. And so I moved over to the long-term side of the aisle. Now I do day trade because it's an incredible tool to create dry powder for my long-term. But what I also realized is I took some time to go experience what happens in corporate finance with investment banking clients and different asset management and wealth management and insurance. I've been all over all of the above. And what I realized is in corporate finance for me, which is why I do everything personally myself through my different companies, whether it's through consulting, privatized asset management, or my fund, whatever it is, I realized that I cannot and could not, under any circumstance, really help clients and help people the way that I wanted to help people. So I know that we're talking about day trading and trading. This is a very much individual task and desire and field. But that being said, being part of our community is what makes day trading so much better, because you have so much information being dropped right in your lap.
I agree. Clayton, we do have like 6 minutes left, just letting you know.
Yes, sir. So I would address what it is that you want to do, what you're passionate about, and then go from there. I realized that what I was passionate about in this realm is making sure that my finances are safe, my family is safe, and I have the freedom to do what I want with whoever I want, whenever I want. That was what drove me to do what it is that I do now.
Financial freedom, baby. Financial freedom. Yep. That's what we're all striving for. Very good. On to the next one, guys. We're going to start ripping through these really quickly because we're literally down to the seconds, it feels like here. So we're going to answer this right here. The small account, like 200, can I start my trading career with you guys in Discord? No, I think you need a little bit more than that to be realistic with you. You could come in and, I've seen people make something from $100, $150, 200, but it will be very, very difficult. Okay. You're going to be trading from a place of scarcity rather than a place of abundance. And, even I would struggle to grow an account starting from $200, right? Even though it's possible. So I'd maybe take some time to build some capital. If anybody wants to quickly comment on that, you can.
I'd put that
we're brief.
whole $200 into your education.
Yep.
That's what I would do.
No, absolutely.
Yep.
You could come in and join us in the live calls. You could paper trade alongside with us so that you understand how to do everything. And you could cover the membership and just be fine. And we'd be able to go over everything that you need to learn while you have another source of income, building up your capital.
Correct.
All squared away.
That would be a much, even if it's not with OBR, I agree with what Logan said. Like, you should invest that money into learning, not into the market. So,
Absolutely.
Yep.
Absolutely.
Okay, moving on. Jonathan Smith, do you guys do any futures trading? I find them much easier than options due to no Greeks to deal with. I personally do not. I don't think anybody in here really does. Maybe Logan has some expertise with it, but no, we don't have many futures traders now. So, yep. Moving on. What is the minimum capital I need to start day trading? I personally say anywhere from like 2,500 to 5,000. Even some people would consider that low. So around there. Any numbers you guys want to throw out there quickly?
3 to 5, unquestionably.
3 to 5,000.
I'd say 5 to 10.
5 to 10. Logan's on the higher side. Cody, what are your thoughts?
3 to 5.
3 to 5. Okay. So yeah, I mean, listen, if you're starting with less than $1,000, even $1,000 is gonna be very, very difficult. And I'm not trying to say to deter anybody. I think everybody in here is capable of generating that income. You just got to, put your mind to it, work whatever job you got to do, store that income, build that capital, and you'll get there. Right. But just make sure that you're paper trading and developing a strategy before you deploy that capital that you've worked so hard to earn. So, yep. 3 to 5,000, if not the higher end, right? It's preferably higher. But that doesn't mean you can't invest, right? That is for trading. You could start with $10 investing. So, just letting you know that. Done. Okay. Do you recommend investing on a mentorship for better understandings of trading? Yeah, I recommend investing and learning. I think that's monumental. You should definitely invest your money into learning. Done here. Between calls and puts, which one is more beneficial? I say calls are long term. If you look at the stock market, it goes up, right? So you're going to be better off from a macro standpoint playing the long side of things, right? The Bears have their fun every so often and they look cool when they're having fun, but most of the time they're losing. So let's just be real, right?
There's one more question in chat.
Cool.
I think it's a really good one. Apart from videos on your website. Oh, sorry. Where did that one go? Oh, what are the best news feeds to understand everything in depth and that happens in the markets for both investing and technical analysis? Essentially, where do you get your info from?
Yeah, I mean, I get my info from a plethora of different places. When it comes to a technical standpoint, it's really just me on the charts, kind of just trying to solve a puzzle. But I'm big on like current events. I love Twitter. Twitter is like a massive resource for me to understanding kind of what's going on. And has a lot of influence over my fundamental decision making with things. And Twitter can often get the news to you before any other place. So yeah, I don't know if that answered the question, but that's a good website. YouTube videos, OBR, go to OBR. I'm not going to shout out any other YouTube channels.
Market Watch, I use that. Wall Street Journal.
Market Watch, sure. Yes, absolutely. FinViz.
Just to add to that, TD Ameritrade has an incredible news portal that they provide, and I cover whatever it is that I think is pertinent every single morning in our live calls that we have. And then I used to go from every single news source. I don't care what political bias they have. I used to consume as much information as possible. So when you're starting, you should do the same. And then when you find how you interpret that information and how you go about utilizing it, then find one or two sources. And now I get a lot of my information from our marketing team and OBR. So I don't have to go too far. Our guys do it the best.
Guys, I think we're going to be wrapping it up here. We pushed this webinar to its absolute limits for our time. I appreciate everybody joining up. I hope to see some of your faces or your, not your faces, but your name tags in OBR's Discord server. I'd love to see y'all there. So I hope you enjoyed today and got some value out of it. This is like the core analyst team over at OBR. So these are the minds that you're going to be dealing with and talking to day in and day out if you choose to, spend your time with us. So hope you enjoyed it. Yeah, it was a good time. Thanks to the analysts for taking time out of your day. I know you could have been trading the market, making them gains, but instead we're here talking to the good people of the internet. So it was a good time.
Thanks everybody for joining.
Good afternoon.
Bye-bye, guys. See ya.
For listening.
Thank you.